Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Friday, 24th of June, 6:04 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin down just a little bit, 0.5%. Oil's up 1.3%, but if you've been following along, that's been getting decimated. So not significant there. Equities are building on yesterday's rally, up about 1%. Quiet on the macro front, except we do have the University of Michigan consumer sentiment at 10, I believe it's 10 a.m. this morning. And if you'll recall, 2 weeks ago, that was, in addition to the CPI, a catalyst for a big drop. I don't think it's going to be as significant today as it was 2 weeks ago, but we still have to have it on the radar. The reason I say that is, one, we've already had the big plunge. We are already on Michigan consumer sentiment below where we were at the great financial crisis. So, I mean, can it go lower? Probably. But I doubt you would see, some massive plunge. And with oil backing off over the last 2 weeks, at least in my neck of the woods, gas prices have come down. I think the last time I looked, we here in Ocala, Florida, we were in the $4.55 range. And it was, $5 10 days ago, so it has come down a little bit. And I think what you'll find is that consumer sentiment will track with gas prices and inflation to a large degree. And of course, those are tied together, one on top of the other. Yesterday, we saw a big yield plunge, and that generated a nice rally, mostly defensive, but your long duration assets did well, like your ARKs and things like that. What I want to do this morning is quickly go through the sectors to show you where we're at, and then we'll jump over into the indexes and FATMAAN names. And also, I want to thank you for your patience yesterday. I woke up to a flickering internet. Wasn't going to be possible to generate a video. And actually, that reminds me, it might be a good exercise for you, especially if you are an active trader, with a lot of, day trading type positions, to go through that mental exercise of what happens if I lose my internet. We take it for granted. You turn on the computer, it's always there, no problem, until it isn't. So go through that exercise. What would you do? Do you have the phone number for your broker? Can you tether your computer to your phone to get an internet connection, even if it was slow? What you don't want to have happen is be totally lost, not being able to get on, and either just simply close all your positions or manage them. But that might be a good exercise to go, kind of hurricane preparedness type drill, the what if kind of scenario. That may save you a ton of aggravation, heartache, and loss of money if you do that exercise at a certain point. So let's go through the SPDR sectors really quickly. Materials, sharp down move off the top of the box. We actually broke it. Now we were down in a void. All the stuff that had been doing so well, fertilizer, copper miners, steel, all that kind of stuff is in the material sector. And you can see that we've dropped below. And a line that I would have alarmed is 77.50 on any kind of a rebound or reclaim from lower levels if this gets going, or if you get a little rally into 77.5 that fails, that would be a real nice objective short. You know that I sent out a memo yesterday on XME, the metals and mining ETF. Put on a small short position on that. Saw a ton of big money traders looking out into July and August on XME. So you may want to take a look at that chart and look at the email I sent yesterday. And if we continue to rally, it may not do much. It may be just a hedge against whatever longs you have. XLC, basically what you're looking at here is Facebook and Google at 44%. The thing I want to note here is that we're already below the pre-COVID highs. Remember, that's a level that we said, to keep an eye on as far as all the charts that you are trading as at least a reference level or a target level, however you want to look at it. We're now below that level on XLC, and you can see now we're below a high volume over price bar, so it's going to have some work to do to recover. But if it can get above 56.50, there may be a rally there, and you've got pretty good support down at 52 on this one. XLE weekly chart from the top of the weekly channel. Now we're making our way to the bottom of the weekly channel. That would be a place to look for some support. We're down here at the approaching, we tagged it, the 40-week moving average in green right here. So you've got a double layer of support coming in at, let's just call it 68. I would watch energy closely here, just even for a technical bounce. Financials back at the pre-COVID highs. You see right here at 30 and a half, something like that. I think that's a good pivot level on financials. Industrials hovering right here about 83, 84, 85, just a little above the pre-COVID lows. So yeah, but not very energetic here in the last couple of weeks, mostly to the downside. Technology got a little rebound this week off of this 126 level. Your pre-COVID high is back here at 100. So if we were to rally here for another week or two and then lose that 126, 125 area, notice that the next big level of support is way down here at 108, and then your pre-COVID high is 100. So quite a bit of room to the downside. Of course, here on the XLK, you're basically tracking Microsoft and Apple at about 45% of the index. Now, yesterday, with the sharp drop in yields, that's going to generate a defensive rally. You can see XLP up 4.6% this week. Why? Well, your defensives, your staples, your healthcare, your utilities, defensive names staples, high dividend players, utilities, high dividend players. When you have a yield drop, that makes higher dividend players more attractive, because think about it. If you're going to get 3.5% on a treasury, why would you take on the stock risk of a utility paying 3%, for instance? So when yields drop, your defensives are going to do quite well. So your Walmarts, your names like that, defensive names, and that grocery outlet just keeps going and going and going. Unfortunately, I let that one go. That was a big mistake. That has continued to do a moonshot. But your staple names, Kimberly, Clark, names like that, I think you know what I mean. And here's utilities on a daily chart, coming off the lows on the yield drop. It's going to get a little harder here in the short term. We've got the 200 here at about, what is it? 68.7. And then we've got the 20 and the 50 above. So if you're long utilities, just keep those levels in mind going forward. We're in the XLV. Had a nice few days of trades. As mentioned in the midday note, I've rolled those positions up to 127, taking the profits, going to the bank, still staying long. Realize that trade may get more difficult here in the days ahead. Why? We've got the declining 50 and then the 200 coming in at about 129.50. Now, if it can get past that, then what do we always say? When you drop out of a well-defined trading range and then you recover it, the technical target is the top of the range, which is all the way up here at 134. So I want to stay with this trade, even if it may hesitate for a day or two or even longer. As long as we don't get a technical sell signal, I want to stick with that trade and see if we can get to 134 at the top of the box. And then if we were to do that, then we'll have a really nice line to go stay long on a breakout, because then that would target these upper levels, or put on a very objective short at the top of the box and then play for a retrace down to the bottom of the box. So we're definitely in sync on this trade. And a shout out to Ron in the trading room that pointed out the trade several days ago, and then of course I pass that on to you. So thanks to Ron for calling that out. XLY, what you're looking at here is to a large degree Amazon. You can see not as energetic as some of the other sectors. We came down and tagged the pre-COVID highs down here near 130. So let's see how far this one can go. So let's go over to our indexes and kind of see where we're at and what we may be headed for in the today and into next week. We came off the low. I think your pivot point for today is 378. Now we're up 1%. So again, we say it every time, that'll leave a 1% gap below, which will need to be accounted for on the opening, of course. Do they come back down for a tag of yesterday's close at 378, or do they just keep going and then enter this gap that starts at basically 382, 381.80? You can see the detail here on the 60-minute chart. You've got a really nice pivot point here at yesterday's highs. And it was interesting yesterday, a little bit frustrating, but this 378 really was a sticking point for quite a long while. We had a touch here, we had a touch here, we had several touches yesterday, and we closed right on that line yesterday at the close at 378. Now, what often happens is, for those people that were watching this line and they were thinking to themselves, I don't want to get long until that line is taken out. Well, they gap over that line in the morning, so that effectively traps anybody that wasn't in, that wanted to get in but was waiting for that technical confirmation of a breakout. So now those people are going to have a decision to make on the open today. Do they buy that open and risk coming back to 378, on a gap fill lower, or do they wait hoping that happens and risk a gap and go? So, and that happens in both directions. You're waiting for a technical breakdown, you haven't gotten it yet, and then the next morning they gap down 2% or whatever, effectively locking you out. So keep your gap in mind, both above and below. If things get rolling, that's a big gap to fill, like $7 or whatever. Keep in mind, you've got a midpoint here about 385, 386 that line up with these prior lows. I would not get panicky if it slows down. And what my game plan is to, if price at the end of the day is within this gap, I'm going to stay long over the weekend and harvest any profits, but stay long and see if we can get a gap fill into next week. So that's how I'm going to try and trade that one today. As we move on to the Qs, very much the same kind of idea. This 285 has been a sticking point for 3 days. Now we've gapped above it. I would keep 290 in focus. That is where the declining 20-day comes in. If we can get above that, then we'll have more room to run for the upside. You can see that there's just a sliver of an unfilled gap from this drop. We came up, we did not quite fill it, and now we're, I think I looked pre-market, we're right in here in this 287.5 area. That would serve as a nice pivot this morning. And you can see that once we get above 287.5, we got some running room up to 292.50, and then an overhead gap above that has yet to be filled. So another thing you could do is draw yourself a little trend line off of this low. You can see, capture all this stuff, and then that could be a reference line for you going forward. And as long as you hold that trend line, or as long as price holds that trend line, you can comfortably stay long. Another thing nice to see is our hourly PPO has broken above the zero line, putting it in the bullish regime, and RSI has broken above 50, which also puts it in the bullish regime. Small caps lagged a little bit yesterday, up 1.2%. You can see here 170 is going to be your pivot this morning. We've got a little gap above, and then we've got a more sizable gap that comes in at 175. And you can see the detail here. Here I've put in that little trend line. We're back up at these prior highs right at the bottom of the gap at 170. So we're up this morning. I think when and if that gap fills, you've got another resistance point at 172.5 that lines up with these lows. If that technical hurdle can be overcome, then I think you're shooting for 175 at the bottom of this larger gap up above. Let's move into our FATMAAN names. Meta really, well, it was up 2%, but it's been falling so much it doesn't really look like a lot here on the 60-minute chart. I do want to point out that you can see this falling wedge. If there were to be a breakout of this wedge above yesterday's high, then this thing could get some running room if the rest, if the rest of the market is looking constructive. I've got a resistance point here at 162.5, and then we've got gaps above that have yet to be filled. Up on the indicators, we've yet to see RSI break above 50, and PPO still has a ways to go to get up into the bullish regime. But if you see price breakout, remember your indicators lag, they don't lead. So once price makes that breakout, you'll see RSI and PPO break higher. And like I said, your first target will be 162.50. Apple had a nice day yesterday. It was up over 2%. You can see, and this is how these things work. Look at all the resistance that was at 137. Spent a lot of time, a couple of days, battling 137. And then once, we had a fake breakout, came back below, but then reaccelerated above. And now, at least on paper, we've got some running room up to 140.5, and then we've got a $1.50 gap that starts at 141 going up to 142.50. I'm long Apple, so I'm hoping that this makes a run today. But even if it doesn't, and things still look productive at the close, I would roll that position out into next week and see if we can get that gap fill. I will let you know, as we come into the close, maybe like 3 o'clock today, kind of what I'm thinking, what I'm doing, whether it looks wobbly and not really confident about a push in the next week. But as it sits now, I think I think I'd rather be take a chance on this rally following through into next week if we're strong today. Tesla, not as strong. We've got, again though, we've got a nice bull move off of the lows and now forming this falling wedge. I could draw that another way to make it look more like a flag, but wedge, flag, doesn't make any difference. You get a break here above yesterday's high at 705. I think you can find 720 as a first target, and then the prior high at 735 as a second target. And if things get going, Friday being a potential lottery Friday, if you get that breakout and it's early in the morning, might be a good payday there if Tesla can put in a couple hours like this or even like this, because if you kind of take the projection, whether it's from here or here, you can see, let's just do it, 850 to 735 is $85. And if you take $85 from the bottom of this flag, that puts you, up into this gap area, and that would be a really nice move to participate in. Microsoft just grinding higher. I was in this yesterday. Well, we talked about the other day. We talked about 254 being a important level because of this high volume bar, resistance, support. So 254 was a really big level to overcome. Now, what made it tough was, I thought this was the move, and then they faded it, and then, came back. So I'm long Microsoft. I'm hoping for a gap fill here, and I would be inclined to stay long Microsoft as long as everything seems to be grinding along. I looked pre-market. It's right here at the bottom of the gap. So with any luck, you can make a push today if everything stays strong and get a gap fill either today or early next week. Amazon, very much like some of the other names that we've already discussed, found a real sticking point here at 111, popped it into the close yesterday. That was nice. I'm long Amazon. I'm looking for 115 where there's a sliver of a gap. And what I like about this chart is now price is in a relative void on the chart. So my hope is that with very little volume over price resistance, that it can make a run up to the next value area that starts at 120. So I want to stay long against 111 on Amazon. I think if you're, of course, there's going to be a little gap this morning, but if they came down and filled that gap and even undercut it a little bit and came back to 111, I think that would be, a beautiful entry. Now, let's look at another potential entry, and that would be right here at 115. That would still be objective. Go for this gap fill. Go for a move to 120, and that's important because you've got this prior high back here on Amazon. Google was really not able to take out this 2245. I think that's going to be your pivot point for today. And we've got a gap that comes in at 2275 and goes all the way up to like 2395. So that'll be a nice $20 gap there to take advantage of if you can get a nice entry. And in this particular instance, same as the other ones, gap open higher. If they come back to fill that right out of the gate and you can get an entry down around 2245, I think that would be a nice objective entry. Moving on to Netflix, nice day, 1.6%. I think your pivot point here is 183.50 with a big prize above, with this gap from 186 to, let's just call it 193. If you can get that, then that would be a nice upside trade. Semiconductors, bad day at the office, relatively speaking. It was red yesterday. I think Intel had some bearish comments and really did not participate. But again, we've got a falling wedge here, and I think if you got a breakout above 208.50, then you could see 212, and then we've got the gaps above. So I wouldn't totally fall asleep on semis. If tech in general and the market look productive, I would certainly have an alarm at 208.50 for a potential breakout of this wedge with the overhead gaps that are still available to be filled. Moving on to ARK, and up 6.8%. I keep telling you this. When you sense that the market is going well and tech is going well, you can get a lot of extra juice out of the ARK names, both on the upside and the downside. When you see tech up 1.5-2%, oftentimes the ARK complex will either be up 3 times that or down 3 times that. So it's almost a leveraged ETF in that sense. So ARKF has been really good. We filled this gap. Now we're above. Took out this high volume over price bar. So now I think your pivot point is 16.8, looking for 17.4, and then potentially all the way up here to 18. So ARKF continues to perform well, as does ARKK, up 7%. There was a nice pivot down here at 41. Filled this gap, got above 43.5, this high volume over price bar. Really now the target is 45.5, and if it takes that out, the most recent high at 47. So that continues on. I've got the trend line off of the bottom. PPO is strong. RSI is strong. And just looking ahead, keep in mind, this is a bear market rally. Don't be under any illusions that we're racing up to new highs. Can this rally extend? Sure. Can we take out 47? Sure. We'll ride it as far as it will go, but at some point, this is going to roll over, and then it's going to be I think, an equally productive short on the downside after this rally has concluded. And, whether that's rates going up or just the whole market rolling over, or these constituent names start reporting junk earnings into the next earnings cycle, into the summer, whenever it may be. We just want to be ready to reverse that whenever it happens. XBI has been a nice trade for us. Pointed out this double bottom low. We pointed out the option activity. So we've got this. It's not a perfect W, but you can picture it. Here's the left leg of the W. Here's the middle. Here's the double bottom. And now we're building out the right side of the W. I've got the measured move in here at 17%. So above this 73 level, that measures out to 85. And if you project total symmetry, left, middle, right, we could get a move all the way up to the 200 at 95. It's not a prediction, just a possibility. But again, I want to stay in that trade as long as possible. You can decide how to manage it, but I've been, as this thing progresses, I am not trusting the bear market rally. So I'm quicker to scrape off the profits as they come. And this would be another one where I want to stay long in the next week, barring any disaster today. So one thing also, we recaptured the 50, and that's always a bullish technical event when you can recapture a significant moving average. And then, of course, so price is above all the moving averages except the 200. One thing I failed to point out so far is at this double bottom low, we did have bullish divergence on the indicators. Now, one thing I have not done is extend this downtrend line, and you can see that it will come in at about 80 on the chart. So that may be a sticking point for price on the way up. But if it were to take out that daily downtrend line, that would be hugely bullish. And I think that would, in fact, open up 95 if the rally proceeds. So let's wrap it up there. Covered a lot of ground this morning. Keep your finger on the trigger at 10 o'clock when that Michigan sentiment comes out. You never know on these data points. I think the damage has been done on, as far as that being a massive catalyst. And if it pops up a little bit because gas prices have come off, that should be a positive. Also, keep TLT on your board. And if you see TLT rising, which is rates falling, that should be a positive for your XLP names, your XLU names, XLV as a defensive sector, and that should also help the ARK complex and tech in general when rates are falling. So let's wrap it up there. Hope you got something out of the video. If you're new here and you appreciate having objective levels to shoot against and kind of creating a game plan in the pre-market, I think it helps a lot. If that interests you, please hit the subscribe button, the alarm bell. jump over in the show notes. You'll find a link to the blog site where you can add your email address. That way, morning, noon, or night, you'll get all my content, midday notes, whenever I see something worth passing along, whether it's unusual option activity or a trade idea. I always pass that stuff along when I see it. You'll get it right in your email box. You won't have to hope that I post it on social media, that kind of thing. And of course, you'll get all the YouTube content in your mailbox as well. It'd be great to have you. You'll also get a link to our trading room where there's a lot of good guys that pick up on things that I don't see. A lot of camaraderie in the room. We'd love to have you there. So let's wrap it up there. Hope you guys have a good wrap up to the week, and we will talk to you next time. This has been Chris Buss with Traders Profit Compass.